In this video, I am going to expand on the information I shared in a video a few days ago about how stocks perform, how they go up and down while you own them, how you can feel more confident while you own stocks, how you can feel better about the decisions you're making about whether to keep holding stocks or whether you should sell stocks. And I'm doing this because I'm getting questions on my YouTube channel from some of my viewers about whether I think they should continue to hold stocks or other assets that they own. Hi, I'm Camille Gaines, and here and on my website, retirecertain.com, I write about and talk about investing. I don't sell wealth management services. I like investing. I think it's super important, and I appreciate you listening to me talk about investing here on my channel. So one of the things I talked about last week, I encouraged everyone to really become good friends with what's happening in the stock market, and I focus on stocks because almost everyone owns stocks. And you may have seen that video. We looked right here at SPY, and we looked at the year-to-date performance of SPY, and we also looked at long-term performance of SPY, and I explained how the chart works and how the important things on this free resource right here that will just help you at any given time take a quick look at important information about the assets that you own so that you will feel confident in your decisions because you understand what's happening in the stock market. And again, I use stocks because almost everyone that follows my channel and almost everyone period owns stocks, because investors tend to sort of be steered toward owning stocks because, well, it's a huge industry, quite frankly. But what I mentioned last time is that this chart only goes back to 1993. And if we look right here, we can see that. And I can actually open this up for you and see, make that a little bit bigger. And thank you to Yahoo for letting me use you for this video. I have a little bit of an affinity for Yahoo because I used Yahoo Finance back in the 1990s when the internet first came out, and I was so excited to be able to look at this online versus having to wait until my value line investment surveys arrived and my Morningstar surveys. And yeah, I told you I was a nerdy investor. So anyway, here we go. Here's a big chart, and you can take a look at this and see that over this time frame, let me see, we're going back right here. This is 2016, and what I want to do is show you the long-term time frame versus the shorter term time frame. And you can just click on any of these right here. Here's the dollar amount, and here's the time frame at the bottom. Nothing to be intimidated here. You know, a picture paints 1,000 words. So when you're wondering whether or not you should continue to own an asset, don't ask me. Come here and look and see whether or not you would be comfortable owning that asset if this happened. Because even though it's a little bit different when it happens again, it's close. You know, things repeat themselves very closely, even though it's for different reasons and it looks different each time that this happens. So this, for example, is the early 2000 bear market. This looks like probably, the 2007 through 2009 bear market. And here we are now. And let's go look most recently, and we can see the stock market's been down. And if we look at a 5-year time frame, the website's kind of doing what it wants here, we get yet a different perspective. So I'm showing you this to encourage you to make this your best friend. Make this your best friend so that you are confident with what's happening in the overall market for the assets that you own, whether that's stocks, whether that's bonds. You could even do the same thing for real estate. You probably may own gold. I don't know if you do. Gold, oil, commodities. You can do this for any asset that you own. And that's what I encourage you to do, to look and see how much it's fallen in the past, and is this something that you could live with. And in order to do that, calculate that, you've got to add up what it is that you own right now. This is one of the first things that we do in our, not one of the first steps that we do in the program, investing program. And by the way, I'm about to open my program. So if you happen to see this shortly after it comes out, you can go to my website to find out when my program will be open, retirecertain.com, and it will be open for just a few days. So if you're interested in that, make sure you check it out. But you've got to first know how much you have in these particular assets so you can determine whether or not you could live with such a decline, and that's how you make decisions on whether or not to continue holding an asset or not. It's first looking at how much you have and then seeing how much risk you have, and also seeing what it is you need to get from that asset in order to reach the investment return that you want. Now, one of the main points I wanted to make here that I mentioned is this only went back to about 1993. And I don't like only going back to 1993, so I wanted to show you an excellent resource and tell you why I like to look at something that goes back further. And that's because the economic conditions, economic cycles can last longer than just 2 or 3 decades. For example, the overall decline in interest rates lasted for about 4 decades. So we want to look back at data that had other events going on in the economy, other things happening, so that we can get a more realistic perspective about how much the assets that we own are likely to decline. So, for example, here, and you can go to, this is macrotrends.net, and you can take a look at a longer term chart and see how the stock market has performed. For example, here's 1950 right here. This is 1915. And I used to sort of discredit this and think, yeah, things are different now. Our economic system has, gotten more, better, but I no longer believe that. It may have gotten worse, I don't know, but I no longer believe that. And here's 1929. We can certainly look at more recently. Here are the 1950s and 1960s where we experienced that long growth. Here's 1966, and you can kind of look and see that the market did sort of nothing from 1966 to 1995. And so this is a really, really long time frame to sort of do nothing. So what we can do is when we see sort of this, even here or here, we can have an awareness. We can have an awareness that assets have been going up for a really long time. And even though it doesn't feel that way when they've been going up for a really long time, they're more likely to go down. It doesn't feel that way. It feels completely opposite. Having said that, it's impossible to know exactly when any asset class, any investment's going to drop in value or go up in value. We just can't know that exactly, but we can look at data like this, simple things that are free for us to give us an overall perspective. I would like to encourage everyone to become best friends with simple free tools like this to have a good perspective of where assets are over any given time frame or in relative to any given time frame. Most of what the investment information that we're presented as individual investors is something like this, maybe 5-year return or maybe 10-year return. And this looks, very doable. It looks really, really different from this. But we need to look at this because this is more realistic than looking at something like this or this. And what we really need to do is hone in on how long negative returns or just static returns lasted, and is this something we could live with based on where we are right now in our lives. If you've got great income and you're working and you're young, no problem. If it may be no problem for you. If you're retired and you have plenty of money and you have plenty of dividend income, which dividend income is low, but you may have bought stocks low, or you may have real estate rental income or other alternative income. This may not matter to you. It's all really a unique decision. I like to encourage everyone to forget the cookie cutter rules. Just forget that and look at where you are and decide whether or not something like this is something that you could live with, or whether you need to make an adjustment in your portfolio. And what would that take? Do you understand it? Are you comfortable with the assets that you own? Do you need to learn more about investing so you're confident in doing it? Do you need to meet with your financial advisor? Do you need to learn more before you meet with your financial advisor? What's the very next step for you? So that's what I really, really encourage everyone to do. And remember, retire certain.